Welcome back to Investing Talk podcast. Today, we're looking into a really interesting, but let's be clear, highly speculative part of the biotech sector. We're talking about Clearmind medicine. They're working on therapeutics derived from psychedelics. Our goal today is to unpack Clearmind medicine for you. We'll get into their financials, recent clinical progress, and sort of what makes them this high risk, high reward kind of play. We'll break down the details. And before we really jump in, if you find this kind of analysis helpful, please do subscribe, like, maybe leave a comment. And hey, if you really like what we do, maybe consider buying us a coffee. Your support, it genuinely helps us keep making these analyses. Okay, so let's get started. Clearmind Medicine, they're described as a clinical stage biotechnology company. What does that actually mean day to day, and what's their main goal?
Well, it means they're not selling anything yet. They're purely in the research and test phase. And their mission, which is pretty fascinating, is developing new treatments from psychedelic compounds for conditions that, frankly, don't have great options right now. Think alcohol use disorder, depression, other mental health challenges. They're based up in Vancouver, Canada, too. It's a specific niche for sure.
Okay, so not just biotech, but psychedelic medicine specifically,
Hmm.
and derived from psychedelics, not the raw compounds themselves necessarily. What's their angle, their unique compound?
Right. It's about what they do with these psychedelic-like structures. Their edge is really their focus on MEAI-based compounds. The main one is called CMND 100. Now, MEAI, that's 5-methoxy-2-aminoindane. The idea here, and this is potentially quite important, is that it might offer therapeutic benefits, especially maybe for addiction,
Yeah.
but possibly with less intense psychoactive effects than, say, psilocybin or LSD.
Less psychoactive. So potentially easier for patients to tolerate, maybe less clinical overhead needed.
That seems to be the thinking. It could make it more accessible if it pans out. CMND 100 is their proprietary oral candidate, and their progress in clinical trials for alcohol use disorder, that's really where they're trying to make their mark right now.
That potential for lower psychoactivity is definitely interesting. Could be a real differentiator if it holds up. Okay, let's pivot to the numbers. This is where it gets, well, real for investors. Looking at Clearmind's financials, what's the big picture, the immediate takeaway?
The biggest takeaway, zero revenue. Absolutely none reported in Q1 2025. And that's not new. It's been like this for years. Now, that's expected for a company at this stage, right? Clinical stage, pre-commercial. But it really underscores that this is fundamentally a research venture funded entirely by investor money right now. And that money is being spent. Their average annual earnings decline is around minus 39%. Compare that to the broader pharma industry, which is growing about, 9%. So it's a stark contrast.
Zero revenue, losses growing. What about earnings per share? How bad is the bleed?
Consistently negative EPS, trailing 12 months, it's sitting at minus $1.22 per share. For Q1 2025 specifically, it was minus $0.24. It just reflects those ongoing R&D costs, regulatory work, admin, all without any income to offset it. Every dollar spent comes from capital raised.
And I guess a PE ratio is completely off the table then. No positive earnings, no ratio.
Exactly, no E in PE.
Also, how do you even try to value something like this without those standard metrics? What are people betting on?
It becomes about the future potential, doesn't it? You're valuing the intellectual property, the potential market size if the drug works, the probability of getting through clinical trials and getting regulatory approval. It's almost entirely based on milestones and future hope, not current performance. Highly speculative valuation.
Okay, makes sense. What about their balance sheet?
Yeah.
Debt, assets, cash flow, what's that looking like? Are they leveraged heavily?
Looking at Q2 2025 data, total assets were about $6.6 million against total liabilities of around $3.7 million. So the leverage isn't extreme for a startup. They have some debt and obligations, but it doesn't look overwhelming relative to assets on paper. However, the cash flow, well, it's almost certainly deeply negative because there's no revenue coming in, the net losses are persistent, and importantly, their R&D spending jumped 100% year over year. They're burning through cash. That's the critical point. How long can the current cash last?
And the return on equity, the ROE, you mentioned it was negative, but minus 173%.
Yeah, minus 173.76%. It's really bad. It means for every dollar of equity shareholders theoretically have in the company, they're losing about $1.74 centifore to Faro.
Wow.
It highlights just how much capital is being consumed relative to the small equity base. It's significantly worse than many peers, even other early-stage biotechs, unless those are in serious trouble. It screams unsustainable without constant new funding. They need a win clinically before that cash runs out, or they face another very dilutive financing round.
Okay, so the financial side is challenging, to put it mildly. But biotech is often about the science first, right? The potential breakthrough. Have there been positive developments on that front despite the financials? What about those clinical trials?
Yes, and that's the potential upside. The reason investors are even looking at this, there was a pretty big announcement recently. June 30th, 2025, Clearmind announced they dosed the first participant ever with their CMND 100 treatment. This was in their phase 3 clinical trial for alcohol use disorder.
First human dosing. Okay.
Right. First time their specific MEAI-based compound, CMND 100, has been given to a person in a formal trial setting. That's a major hurdle cleared.
Phase 3. So safety first, then some early signs of efficacy.
Exactly. Phase 1 is primarily about safety, finding the right dose range. Phase IA starts looking for preliminary signs that the drug might actually work in a small group of patients. Getting here means it passed preclinical tests, animal studies, toxicology, but it's still very early days in the human testing journey. Long way to go.
And are they just doing this trial in one place or expanding?
They're expanding. Just a few days after that first dosing news, on July 3rd, they announced they got approval from the Institutional Review Board, the IRB, at Tel Aviv Sourasky Medical Center in Israel.
Okay, Tel Aviv. What does getting that IRB approval really mean? Is it just paperwork?
Oh, it's much more than paperwork. The IRB is an independent ethics committee. They scrutinize the trial plan, the patient safety protocols, how patients are informed and consent. Getting their approval means they've judged the trial ethically sound and scientifically valid enough to proceed there. Having sites like Tel Aviv Sourasky, plus existing ones like Yale School of Medicine and Johns Hopkins, that adds significant credibility, and it helps them enroll patients faster.
Credibility and access to patients. Makes sense. What about protecting the CMND 100? Intellectual property. You mentioned patents.
They state they have 19 patent families with 31 granted patents, and they're apparently still filing for more.
19 families, 31 granted. Sounds like a decent amount. Is it strong protection?
The number sounds good for their stage, yes. But the key questions are always, how broad are these patents? Do they cover the core compound or just specific uses or manufacturing methods? How long do they last? Strong, defensible IP is absolutely crucial. It's what potentially gives them exclusive rights to sell the drug if it ever gets approved. Competitors are always looking for ways around patents. So continuing to build that IP portfolio shows they're thinking long-term about market exclusivity, assuming the trials work out, of course.
Okay, so we have early but positive clinical momentum backed by some IP set against a really tough financial backdrop. How does this position Clearmind in the market right now? How are investors reacting?
Well, compared to some other players in the psychedelic or mental health space, they're still seen as lagging a bit. They're pre-revenue, while some competitors might have drugs in later stage trials, maybe phase I or phase 3, or even generating some early revenue from related activities. Their price-to-book ratio, the PD, is around 1.92x.
1.92. How does that compare? Is that high or low for this kind of company?
It's actually a bit below what you might typically see for some early-stage biotechs, even speculative ones, which kind of suggests market skepticism. Investors seem to be saying, okay, there are assets on the books, there's IP, but we're not convinced yet about turning this into real value soon without more concrete catalysts.
Skepticism reflected in the valuation. Okay, so what are the absolute biggest risks, the red flags investors need to keep front and center?
Well, the first one is obvious, the persistent losses and lack of revenue. That constant need for cash. Second, the huge reliance on clinical trial success. It's very binary. If CMND 100 works for AUD and gets approved, great. If it fails in phase 2 or 3, the value could plummet. Third, dilution. We mentioned that 220% increase in shares outstanding year over year.
Yeah, that's huge.
It means each existing share represents a much smaller piece of the company. Future fundraising will likely mean even more dilution.
And the whole regulatory environment for psychedelics, that's still evolving, isn't it? Not like approving another blood pressure med.
Absolutely. Regulatory uncertainty is a major overhang for the whole sector. How will agencies like the FDA approach these compounds long term? There are public perception issues, potential for abuse, scheduling questions. It's complex, and then there's the simple risk of running out of money. Can they keep raising capital, especially if market conditions tighten for speculative biotech? It's a real concern.
How do they stack up against some peers we might know, like, say, MindMed or Smarosibin? Are they playing the same game, or are there differences in strategy?
There are definitely differences. If you look at the bigger picture, companies like MindMed and Cybin often have perhaps broader pipelines, multiple drug candidates targeting different conditions. MindMed, for example, has pushed some programs into phase I trials, which is a step ahead. Cybin has also focused on novel ways to deliver psychedelic compounds, not just the compounds themselves. Another point is insider ownership. You often see higher insider stakes, maybe over 10%, in these early biotechs. It signals management's skin in the game. Clearmind's is lower, around 2.88%.
2.88%. That is quite low.
It could mean several things, maybe less conviction from insiders buying on the open market, or just how the company was initially funded. But it's a point of comparison. Also, peers moving into later stages, phase 2 or 3, often secure partnerships or licensing deals that can bring in non-dilutive cash and validation. Clearmind doesn't seem to have announced major partnerships like that yet.
Okay, putting it all together then. The science, the financials, the risks, the peers. What's the bottom line on Clearmind Medicine as an investment prospect right now?
Look, it's highly speculative, full stop. The positive. They have an innovative approach with MEAI, they hit a key milestone with first human dosing, they're expanding trial sites with reputable institutions. That's all good. But the negatives are substantial. Extreme stock volatility, significant financial risks, no revenue, high cash burn, dilution. It's really only suitable for investors with a very high tolerance for risk who understand the potential for complete loss, but are drawn by the potential high reward if everything goes right in the clinic and with regulators, and that's a long way off.
It really does seem like a binary bet. Significant potential upside tackling something like alcohol use disorder. You mentioned the WHO stats. Nearly 5% of global deaths linked to alcohol. That's a huge need. If CMND 100 works and gets approved, they could be a leader. But that's a massive if.
It is, and it's crucial to remember that early phase trial success, phase I3, doesn't guarantee anything. Many drugs fail in later, larger, more expensive trials, or they fail to get regulatory approval even with decent data. Setbacks are the norm in biotech, not the exception. And the novel nature of psychedelic medicine just adds another layer of complexity and risk.
So this look at Clearmind really throws that early-stage biotech gamble into sharp relief, trying to solve a massive problem with cutting-edge science, but facing huge financial and clinical mountains to climb. It leaves you thinking, doesn't it? How much potential does psychedelic medicine truly hold for transforming mental health care? And how do you balance that hope against the cold, hard realities of funding these incredibly expensive, high-risk ventures? Something to keep thinking about as this whole field develops.